interviewing the leading private equity executives and unlocking the secrets of success. Welcome to the Private Equity Podcast with Alex Rawlings.
Welcome back to the Roth Selection Private Equity Podcast, interviewing the leading private equity executives on unlocking their secrets to success. Joining us today is Jim Roth, founder and managing partner of Zamo Capital. Welcome, Jim, and thank you very much for sharing your insights.
Thank you for inviting me.
So, Jim, as is customary, if you could give us a 60 to 90-second breakdown of you, please.
Sure. So my background, I have a long-standing interest and experience in the field of impact investing. I co-founded a firm called Leapfrog, now almost 2 decades ago, and have been involved in impact investing ever since. And most recently, I founded Zamo Capital. And the purpose of Zamo Capital is to provide advice and counsel to help and capital to help other impact managers scale.
Perfect. Thank you very much for that. So what is one mistake that you see private equity firms or portfolio companies making, and what actions would you suggest to correct them?
With respect to what? In particular?
Well, based on your experience, have you seen any mistakes that private equity firms have made or their portfolio companies, and anything you would say, do you know what? Yeah, we see this all the time and we'd suggest that this is changed to correct it.
Yes. So if I have to think about, what we do at Zamo and the advice that we give to emerging managers, I think one of the key challenges is they often focus on the portfolio companies and the needs of portfolio companies very intensively, often because they may come out of operating backgrounds and that's what they know, and focus far less on LPs. And so if there's one single piece of advice I would give to emerging managers, it's focus on LPs and think from LPs backwards.
Okay, perfect. And so you've gone down the impact investing route, and that was a trait, I believe, of Leapfrog and certainly now of Zamo. What made you focus on that particular area? Is that a personal passion, or did you just kind of fall into it, Jim?
It's a combination of a personal passion. I wanted to do something where I could use my skills, knowledge, experience, my interests, and combine that with I think what is now become, which I suspected would become and has now become a hugely important source of asset allocation. So really, those are the sort of motivations. I saw this as a field that was going to grow and scale, and it aligned with my personal ambitions and desires and skill sets.
Perfect. And I know from my research online, you've spoken a lot about what I foresee as a bit like sustainability, really. ESG came in and certain funds jumped on the back of it and promote themselves as ESG specialists, and where sustainability seemed to be a big impact. And I do know personally of firms that claim to be sustainability will just find an element within a business that has a level of sustainability, even if it's just they turn the lights out at the end of the day. Maybe a bit embellishing there, but the concept the same. What's your kind of take on the kind of greenwashing and that kind of, we're all an impact fund and we're all focused on doing good and etc.? What's your kind of take on things and what's been unfortunately brought into the industry, I think?
So I think there are a few. I mean, there's quite a bit to unpack there. I guess when I first started in impact investing, very few LPs took it very seriously. It was really small allocations, and it was often, conflated with CSR, and, lots of LPs simply had a small allocation to, get good stories to put into the CSR section of their annual reports. And I think what's changed over the years is that, the ultimate asset owners, the pensioners and the insurance policyholders, have increasingly over time put pressure on the asset owners themselves to do something, to use their capital to make a difference. And I think that's one of the really big changes. And I think that's been largely driven by climate change and concerns about climate change by, pensioners and insurance policyholders, and has fed through to asset owners. And so, to go back to your question, how have things changed in terms of greenwashing and impact washing? I think 20 years ago, fund managers could get away with fairly light, fairly tangential claims about the impact that they were having. It's much more difficult to do that now. And what we're also seeing is we're seeing funds being specifically allocated, particularly from governments, to be invested in climate initiatives and climate-related businesses, and they are more and more concerned about the measurements and the management, and are putting greater and greater emphasis on making sure that what's going on is real and legitimate. And we're seeing this in some of the actions that are being taken. Most recently, it's at DWS. But we're seeing this in other places as well. We've now seen the first, a potential class action lawsuit against Home REIT, which is a social housing fund. So there's greater and greater emphasis, and I think it's ultimately being driven by the ultimate holders of the assets, the pensioners, policyholders, the university stakeholders for endowments, and I think that's a huge change, a sea change from what we've seen 20 years ago.
Out of interest, Jim, how would you define kind of impact investing? Because we see it as do good and do right, I suppose, but what would be your definition inside the market, and being so passionate about it? How would you define that from any kind of firm claiming impact?
So I think firstly, it's probably useful to distinguish between impact investing and ESG. So I think of ESG as what you don't do, what you avoid doing, and impact is having a positive impact. And by positive, there'll be some investor that has a particular social or environmental value that they have, and they will want you to invest to help achieve that value. And I don't think there's a sort of a definition of of good. It's really about what is it that what value does the investor have that's not just a financial, that's not just a financial return. What do they want you to achieve with their capital? What social or environmental impact do they want you to achieve? And those values can be pretty diverse and divergent. So you could have a fund that was wanted you to invest in women's rights, that would invest in abortion clinics, and you could have a fund that's run by a religious community that is anti-abortion and wants you to do the opposite. And so there isn't a single set of values that's associated with impact investing. Rather, it's about investing behind particular values that investors want you to have. And so it's about investing to achieve something in addition to a straight financial return that your investors want.
Okay, makes sense. And so if we just think about that, you mentioned about the environmental and social side. Does it have to be that level? Because I just think if I'm outside of private equity and someone says to me, well, impact, and then I could argue as a big advocate for private equity that any private equity firm operating in good faith, which is the majority, investing in a business to then grow and develop that business, usually creates local jobs, usually creates supply chain impacts, which then create wider impacts on the supply chains and local and etc. from there. Is that, I'm playing a little bit of devil's advocate because I don't believe that is impact, but maybe because of that flexibility in the impact name and status, it means that so many firms could, as you put it, impact washing on there. So is that defined there by the social environmental impact? Is that how you would kind of, how do we kind of ring fence that to prevent green and impact washing? Sorry to interrupt here. Just a quick note to highlight our new sponsor, Grata. The private equity market is rapidly shifting to a data-driven, proprietary deal sourcing standard. Grata provides the window into over 7 million middle-market private companies. Contact Grata so you can access the market first. Request a demo at www.grata.com. Now back to the podcast.
So I think it's about what it is that your investors I think the impact ultimately gets defined by the people who own the capital, right? The people that are hiring the manager and saying to the manager, we want you to invest to achieve something. So I don't think there's a sort of an absolute definition, an objective definition out there in the world. This is impact, that isn't impact. I think, it doesn't make sense to say that, everything is impact. That clearly isn't sensible. But I think what's critical is